Right. So now what to do? Continue with items of financial statement or keep it for tomorrow? Right. So we'll keep items of financial statement for tomorrow. We've had a good dose of the items of financial statement for today. And then now we will look into the cooperative societies and also something into the basics of audit so that we have a good bucket, of different discussions over there. Are you realizing a few things in a fast track class that you can sit at one place for 3 hours? You understand your potential, you understand your capacity, your how much your brain, human brain, and such what do you say, innumerable capacity or such abundant capacity of the brain, right? You just keep on underestimating the power of but there is too much of power which is there in all of you. And are you liking the subject of audit? You say, ma'am, now we will say yes, so just to keep you happy. Okay, but at least, is your fear towards the subject going away? Like, huh, but then do you then your fear towards the subject, or fear towards certain particular chapters, like, oh my God, this bank audit chapter or this items of financial statement. That is why these big dragons I picked up first, no? And these big chapters over there, right? Tomorrow also we'll have like analytical procedures, audit sampling, automated environment, right? So all, five chapters. Now the bank audit today was a big one, but otherwise we'll able to try to cover more, and we need to do it as early as possible so that we can have a dedicated session for the MCQs and the correct and correct also, right? So now, and then yes, now let's come to a very small chapter over there, which is the audit of the cooperative society. So if you see it in the study material of ICAI, it is incorporated in the chapter of the different types of entities only, but I created a separate chapter out of it, which is the audit of the cooperative societies. Again, an upcoming chapter, right? Like a bank audit chapter, which was never there in the syllabus and now there in the syllabus, right? So, lot of questions again coming slowly and gradually regarding the cooperative societies, right? So, regarding cooperative society, now we have to understand first two things. Okay, whether the question is regarding the cooperative society or whether the question is regarding the multi-state cooperative society. If it is regarding the cooperative society, is it regarding the features of the cooperative society or is it regarding the audit features of the cooperative society? Right? So one, you have the features of cooperative society, and then second, it is what is so special if you're doing an audit of a cooperative society. So what are the features of the cooperative society audit? And then another you have is the multi-state cooperative society, which is similar, not same, similar to the Companies Act. It was very same to Companies Act 1956, but Companies Act 2013, it is similar to multi-state cooperative society. Okay, so in the exam, whenever you see cooperative society, first speed breaker is what? Whether it is a question regarding cooperative society or whether it is a question regarding multi-state cooperative society. Then if it is regarding cooperative society, what is the next question? Whether they are asking me the features of cooperative society or are they asking me the audit features of the cooperative society. Okay, right? So cooperative societies are of the people, by the people, and for the people, right? So cooperative business is a means of business organization, special mode of doing business, pulling together all means, elimination of middlemen and the exploitation from the outside sources, right? So coming together for the mutual benefit. And obviously every cooperative society need to get their accounts audited at least once in every year, right? The registrar, so just as you have a registrar of company, cooperative society, you also have the registrar of the cooperative societies. Again, they require that the accounts of the cooperative society must be audited by a person authorized by him, right? So yes, the account should be audited by a person authorized by him, right? So what are the three questions we are going to discuss now? Three big chunks which we are going to discuss. One, features of cooperative society. Second, the audit features of cooperative society, and then study the provisions regarding the multi-state cooperative society, and that would complete our discussion of this chapter. Okay, right? So now first coming to the features of the cooperative society, right? Features of the cooperative society, right? So first feature, okay, what are the qualifications for the auditor of a cooperative society? Yes, who can be appointed as an auditor of a cooperative society. Then whoever can be appointed, who can appoint, right? So appointment of the auditor of the cooperative society, right? Then after that, what are the books of account to be maintained by a cooperative society? What are the investments which can be made by a cooperative society, right? So books of account and investments of the cooperative society. Then what is the restriction on the cooperative society with respect to three things? One, the restriction on the loans. Second, the restriction on the borrowings. And third, the restriction on the shareholding of the cooperative society, right? So restriction on loans, restrictions on the borrowings, and the restrictions on the shareholding of the cooperative society, right? Then the utilization of the cooperative society working capital, right? So utilization of the funds by the cooperative society. Then what about the appropriation of the profits, right? What about the distribution of the profits or the dividend or the bonus being given to the members of the cooperative society? Then what about the contribution for charitable purposes? You know, just as a company can contribute for charitable purposes, even a cooperative society can contribute for charitable purposes. And also the contribution to the education fund by the cooperative society, like the contribution to the education fund by the cooperative society. So this is the first chunk of our discussion. What are the three chunks of our discussion? Features of cooperative society, then the audit features of the cooperative, and then we have the provisions regarding the multi-state cooperative. Right now we are in part 1 of our discussion. What is part 1? Features of the cooperative society, and these are all the features of the cooperative society which we have for discussion, right? Yes, who can be appointed as an auditor of a cooperative society? What is the qualification, right? A chartered accountant or a government diploma in the cooperative accounts, or a person who served as an auditor in the cooperative department of the government, right? So generally company who can be appointed as an auditor, chartered accountant. But now for cooperative society, three qualifications. What are the three qualifications over there? Either he should be a chartered accountant or holding a government diploma in the cooperative account, or a person who served as an auditor in the cooperative department of the government. Qualifications of the auditor, chartered accountant. So now see, now if you don't know this, then what you will say? MCQ comes in exam. Qualifications for the qualifications of auditor of a cooperative society, right? Cooperative society, who of the following can be appointed? And they give four options: chartered accountant, government diploma in cooperative accounts, person who served as an auditor in the cooperative department of the government, or any of the above. Logically, what will my mind say if I don't know the legal provision? Chartered accountant. How dare anybody does an audit when I am still existing on earth? You understand? No, that is what your logic will say. But what you know, for MCQs and all of that, knowledge is power. No, your, what you say, your logic is not power, knowledge is power. What is knowledge is power over here? Okay, what are the qualifications of the auditor as per the cooperative society law? Chartered accountant or a GDCA or a person who served as an auditor. That is why what will be the correct option? The D, any of the above. Okay, right. Then who appoints the auditor in case of a cooperative society? The registrar of cooperative society, right? So company who appoints auditor? Shareholder. But cooperative society, who appoints the auditor? The registrar of the cooperative society. Do you again see an MCQ created over there? Okay, who appoints the auditor in case of a cooperative society? The registrar of the cooperative society, right? What am I discussing with you? The features of the cooperative society. Are you all with me? Right, features of the cooperative society. Then what are the books of account to be maintained by a cooperative society? So retail question, right? Do you know what is the section of company law for books of account? Section 128. And how does company law section 212 and section 213 define books of account as? Yes, how do you define? If you say, oh, these are my company books of account in the mobile, so that means what is there in my mobile? All sums of money received and expended by the company. All sums of money received and expended by the company. In simple language, for code word, I remember it as the cash book. In the exam, I don't write cash book. Exam, I write all sums of money received and expended by the company. Then all sales and purchases of goods and services by the company. All sales and purchases of goods and services. So that is nothing but code word for that is what? Hint word for that is what? Trading account. Then all assets and liabilities of the company. So again, that is nothing but the balance sheet. And then it says if prescribed by the central government, then also the cost records of material, labor and the other items of the cost. This is what you mean by books of account. All sums of money received and expended, or matters in respect of which the income and expenditure has taken place, all sum sales and purchases of goods and services, all assets and liabilities, and cost records if prescribed by central government. These are books of account of a company. Now I am talking to you about books of account of a cooperative society. What does it say? All sums of money received and expended, or matters in respect of which receipt and expenditure take place. All sums and money received and expended by the society. All sales and purchase of goods by the society. All assets and liabilities of the society. So instead of company, now I say society. Right. Also, we have this question for the multi-state cooperative society. For multi-state cooperative society, what are the books of account? Again, all sums of money received and expended, all sales and purchases, assets and liability. And if the MSCS is engaged in PPM, what is PPM? Production, processing, manufacturing. Then MLO. What is MLO? Material, labor, other items of the cost, right? So that's nothing but the cost records, right? So have I discussed with you three questions? Books of account of a company, books of account of a cooperative society, and the books of account of a multi-state cooperative society. Are you understanding? All questions in for the exam. Books of account of cooperative society, books of account of multi-state cooperative society. So what are the basic elements of the books of account of cooperative society? Cash book, trading account, balance sheet. And in addition to that, depending upon the nature and objective of the society, it may maintain the following books also. For example, it can have a record of the cash sales, also the credit sale, right? Then loan disbursement and also the loan recovery, and any other columnar subsidiary. So this is the extension which I have to add to the books of account of cooperative society. What extension? Right? What extension? Daily cash sale summary register. Then the collection from the debtors for the credit sale. Then the register of recovery of the loan disbursement register, and any other columnar subsidiary. So what did I say? Cash sale, credit sale, loan disbursement, loan recovery, and any other columnar subsidiary. Are you understanding that? Books of account of a cooperative society. You know, earlier cooperative society chapter was there in CA final audit. From CA final audit, they deleted it and they put it in inter audit. So when it was there in CA final, so many time question used to come in the exam regarding books of accounts of a cooperative society, right? It's a candidate for a retail question. Is everybody understanding that? Okay, right. So those are the books of accounts. So what am I discussing with you? The features of cooperative society. What did I discuss? Qualification of auditor, appointment of auditor, books of account. Now we talk about the investments. What investments can be done by a cooperative society? Right? What investments can be done? So you no no you think you are an advisor over here, and you have been told to suggest okay, what are the investments which can be made by a cooperative society. So now you like become a financial advisor and you say, oh, you want to invest, you have 20 crore rupees with you, no problem, open an FD. Then what you can do, you can also purchase some gold. Then what you can do, you can also buy some land. Then what you can do, you can also put some equity, right? You can also invest in some startup, and then you congratulate yourself, my god, free, in free I have given such a wonderful advice to the company, free of cost I am giving advice, to the cooperative society. These are the investments you can make, where you can invest FD, gold, land, equity, startup. Okay, and now if you write this in the exam, you'll get a big zero. Why they give big zero? Because they can't give negative marking, so to convey their disappointment towards your answer, they give a big zero over there. Because are these the investments of cooperative society? Not at all. What are the investments which can be made by a cooperative society? It can invest in the central or state cooperative bank. It can invest in the central or state cooperative bank or any other cooperative bank as approved by the registrar. Then it can invest in the Indian Trust Act securities or share securities debentures of any other society. So one cooperative society, can it invest in another cooperative society? Yes. And the last one, any other monies as permitted by the central government or the state government. So you know what is to be written in the answer. What is? This is what should be. And what I have written over here is what is. What is? Gonna FD, gold, land, equity. What should be? Central or state cooperative bank. Any other cooperative bank as approved by the registrar. Indian Trust Act securities. Share securities of any other cooperative society or any other monies as permitted by the central government or the state government. This is what should be. Yesterday did I teach you the difference, definition of material misstatement? What is a material misstatement? Material difference between what is and what should be. This is a material misstatement between what is and what should be. And a material fraud you have done in writing your answer in the exam. And a material error you have done in writing your answer in the exam. Because as per, this is writing in own language. This is writing as per what I think should be the investment done by cooperative society. And obviously, what you need to write in the exam is these. Like the investments of the fund. What is? You don't write this in your book. This I'm just giving you as an example. I'll delete it. Okay. Right. So what are the investments? Central or state cooperative bank. Any other cooperative bank as approved by the registrar. Indian Trust Act security. Share security bond debenture of any other society with limited liability or monies as permitted by the central government or the state government. Okay. That is the investments of a cooperative society. Then what about the loan? It says a cooperative society can give a loan only to its members, or it can give a loan to another registered society with the special sanction of the registrar. So cooperative society cannot give a loan to any person other than its member, and with the special sanction of the registrar it can give a loan to another registered society. So MCQ, correct and correct. Okay, can one cooperative society give a loan to another cooperative society with the special sanction of the registrar? Okay, then how much borrowing can a cooperative society do? How much loan it can take? It says as decided by the bylaws of the cooperative society. So now see, like for a company, for a company, we have the memorandum of association and the articles of association of a company, and we have the board of directors of a company. For a cooperative society, we have the bylaws of the cooperative society and we have the managing committee of the cooperative society. Are you getting the terminology? Right? For a company, you have MOA, AOA. For a cooperative society, we have the bylaws. For a company, you have the board of directors. For a cooperative society, you have the managing committee of the cooperative society. Okay, right? So restriction on the borrowing. How much they can borrow depending upon the limit as laid down in the bylaws. And what is the third restriction? Restriction on the shareholding. 20% of the total number of shares or shares of the value of rupees 1000, whichever is less. It should not exceed a maximum of 20% of the total number of shares or shares of the value of rupees 1000. That is why, because we don't want concentration of power in case of the cooperative society. That is why there is a restriction on the shareholding. Are you understanding that? Restriction on loan, restriction on borrowing, and restriction on the shareholding. Next 3 points. Then what are the points over there? Appropriation of profit. Can a cooperative society declare dividend? Can it give bonus to the member? Yes, after transferring certain amount to the reserve fund. Then how much they can contribute for charitable purposes? Not exceeding 10% of the net profits with the sanction of the registrar. Right? How much they can contribute for charitable purposes? 10%. And so I need to know that 10% over there. Right? Contribution for the charitable purposes. Then how the cooperative society can utilize its reserve fund or working capital? Only towards the object of the cooperative society. And a cooperative society, whatever profit it has, whatever reserves it has, can it use towards anything which is not allowed as per the bylaws? No, it should only use the money as per the objects of the cooperative society. And then it says a cooperative society also needs to contribute to the education fund. How much it needs to contribute? It says it depends upon the class of the cooperative society. We'll see class. After the CA has done the, or the GDCA has done the audit of the cooperative society, they have to award a class to the society. Like, rating, class A, class B, C, D. And depending upon the class of your society, accordingly you need to do the contribution to the education fund. And this is not an appropriation of profit, it is a charge on the profit. Right, so what are these points? These are the points regarding the features of the cooperative society. Are you all with me? Right, utilization of funds only towards the object of the society. Appropriation of profit can be done after the transfer to the reserve fund. Charitable purposes with the sanction of the registrar, not more than 10%. And education fund depending on the class, and it is not a appropriation of profit, but it is a charge against the profit. Wonderful. Now let's come to the audit features of the cooperative society. Are you all with me? Right, the audit features of the cooperative society. Right, so now what are the audit features of the cooperative society? One, the examination of the overdue debts. Right, examination of the overdue debts of a cooperative society. Obviously with overdue debts there will be overdue interest. And what do you think? Overdue interest, how it should be recognized? Cash basis, realization basis, actual basis, because it is overdue. Na? Today we studied in NPA. Na? NPA, interest recognition, income is to be recognized on the cash basis, realization basis. Okay, right. Then next point over there is regarding the valuation of the assets and liabilities of the cooperative society. Then there is a point regarding the certification of the bad debts. Right, why I need, you see, earlier what the thing used to be, na, okay, either they can ask the entire question of few parts or something like that. But now why we need to go through each part? Because of the MCQ and because of the correct incorrect also. Right, so certification of the bad debts and verification of members register and the examination of their passbooks. Verification of members register and examination of their passbook. Then also what does it say? Adherence to the cooperative principles. The adherence to the cooperative principles, and then the observance of the provisions of the act, rules and bylaws. So whether the cooperative society has complied with the act, the rules and the bylaws. What am I writing right now? Points regarding the audit features of the cooperative society. So when you are doing an audit of a cooperative society, these are the points you need to consider. Checking of overdue debts, overdue interest, then the valuation of their assets and liabilities, certification of their bad debts, verification of members register and examination of their passbook, adherence to cooperative principle, observance of the provisions of the act, rules and bylaws. Then what does it say? Special report to the registrar, right? Special report to the registrar. This question is R raised to 10. Right, special report to the registrar. Right, then after that, what I told you, audit classification of the society. So at the end of the audit, the CA has to award a class to the society. So the audit classification of the society and discussion of draft audit report with the managing committee. So can the CA finalize the report and issue it to the registrar without discussing the draft report with the managing committee? Can the CA finalize the audit report and issue it to the registrar of cooperative society without discussing the draft report with the managing committee? No, report should never be finalized without discussion of the draft report with the managing committee, the draft audit report with the managing committee. Right, so what heading have I written now? Audit features of a cooperative society. Right, so overdue debt means cooperative society has given a loan to its members, and now the members have to repay that loan, and what they are doing, they are not repaying the loan. So now it is overdue. So how classification of overdue debts is to be done? It says overdue for 6 months to 5 years and more than 5 years. Right, how overdue debts are to be classified for cooperative society? Overdue for 6 months to 5 year and more than 5 year. Right, 6 months to 5 year, and then after that also the more than 5 year. Right, 6 months to 5 year and more than 5 year. Generally, for a company, how we say more than 6 months and less than 6 months. Here, what does it say? 6 months to 5 year and more than 5 year. Then, obviously, overdue debts, they will affect the working capital position. For overdue debts, you also need to check whether the provision has been done and what are the chances of the recovery, and whether the provision for the same, whether it is satisfactory. Could this be asked as a retail question in the exam? 100% yes. Overdue debts. What are the 4 points? Overdue debts have to be classified as 6 months to 5 year and more than 5 year. Overdue debts very important because they affect the working capital position of the society. You need to check the chances of recovery for the overdue debts, right? And accordingly decide whether they have to be classified as good or bad. And then also, what does it say? The proper provision and whether the same is satisfactory. Right, so that's the overdue debt. Then overdue interest, what does it say? It should be excluded. Why excluded? Why overdue interest should be excluded? Because it is to be recognized on the cash basis. Okay, stop. Okay, why? Huh. But it's working, no? No? Okay. Fluctuating, no? Oh my God. Read till in your books, whatever headings I've written over here. Start reading each of them on your own. Try to analyze. Okay, what does that heading mean over there? Look at the study materials in the hands of the student. They look brand new. Oh, gone. Right, so let's continue with our discussion, some power fluctuation, but now let's continue with our discussion. So examination of the overdue debts, overdue interest. Then after that, valuation of assets and liabilities. How the assets and liabilities are to be valued? Fixed assets at cost less depreciation, and current assets are cost and or NRV, whichever is lower. Are you understanding that? Fixed assets have to be valued at cost less depreciation, and current assets have to be valued at cost or NRV, whichever is lower. And liabilities, you have to distinguish between the known liabilities and the contingent liabilities. So that's regarding the valuation of the assets and the liability. Then certification of bad debts. A cooperative society can write off a debt as a bad debt. No, we'll never receive the money from this debtor only after it has been certified by their auditor or it has been authorized by the managing committee. Right, again a favorite one for the retail questions in the exam or the MCQ part of the paper. That when can a cooperative society say ke, oh ho, we will never receive this money? When it has been certified by the statutory auditor or it has been authorized by the managing committee. Clear to everyone? Certified by the auditor or authorized by the managing committee. Right, then what? Next one, verification of members register and the examination of their passbook regarding loan given to the member, the repayment of the loan and the confirmation of the loan balances. Right, so that's regarding verification verification of the members register and the verification of their examination of their passbook. What is the next feature? Adherence to the cooperative principle. Like, in government audit chapter, we are yet to do government audit, but there we have a discussion regarding the propriety audit. What is propriety audit? There should be no unnecessary expenditure, right? There should be no expenditure, should not be prima facie more than what the occasion demand. So even in case of cooperative society, what does it say? There should be no wastage of fund. Propriety audit principle should be followed. Propriety audit, where we discuss in the chapter of the government audit, right? So propriety audit principles should be followed. Then the cooperative society, it should follow the rules and the bylaws. There should be no infringement. What do you mean by infringement? There should be no non-compliance with the provisions of the act, rules and the bylaws. There should be no non-compliance with the provisions of the act, rules and the bylaws. Is everybody understanding? What did I say? First, what did I say? Examination of overdue debt could be retail question, and a 6 months to 5 year, more than 5 year. Then it affects the financial position. Then you also need to check the classification and the provisioning, whether it is satisfactory. Then these are the other features. Then after that, depending upon the, yes, depending upon what you say, the findings of the auditor, accordingly, depending on the overall performance of the society and the findings of the auditor will award a class to the society. What are the classes I told you? Generally A, B, C, D. And now the society is not happy with the class which is given by the auditor. Okay, auditor gave them a B class and they say, no, we have to get a A class over there. Can they review the class which is given to the cooperative society? It may be noted that if the management of the society is not satisfied about the award of class, it can make an appeal to the registrar, and the registrar may direct the review of the audit classification. Again, an MCQ. Right, direct a review of the audit classification. Then the report should never be finalized without discussing the draft audit report with the managing committee. And then what did I tell you? Special question over there, special report to the registrar, right? R raised to 10. What did I say? I'm waiting for this question to come in the exam. The special report to the registrar of the cooperative society. One, we issue a normal report like true and fair report, but this is like what? A special report to the registrar of the cooperative society. What does it say? When would you issue a special report to the registrar of the cooperative society? When you notice some serious irregularities in the working of the society. And what could be those serious irregularities over there? Personal profiteering by the members of the managing committee. Right? So say the cooperative society, I'm just giving an example, it is dealing in cashew nuts. Right? So cashew nuts, and every day so many quintals of cashew nut, and then do the packing in the boxes and all, and then they are selling the cashew nuts over there. Okay, and what all the members of the managing committee are doing every day, both their pockets, they are filling with the cashew nut and taking it home. And or they are putting it in their car and they are taking the cashew nuts home. Now are they doing the cashew nut business for taking it home? No. So personal profiteering by the members of the managing committee. Then detection of fraud related to purchase, expense, property or stores. Specific cases of mismanagement, that is decisions which are against the cooperative principle, that is unnecessary expenditure being incurred. Or in case of urban cooperative bank, disproportionate advances being given to vested interest group. Right? So generally what do we say? Cooperative society, it should give equal amount of loan or whatever to all its members. Here what does it saying? To the vested interest group, it is giving the disproportionate advances, and that is what they are doing. They are doing reckless advancing. Reckless advancing means what? Without judging the credit worthiness of the party. So obviously before they give a loan, should they check for the credit worthiness? Yes, but here they are not checking for the credit worthiness. So no surprise if I see a question on this one in any of the upcoming exams, and I always tell my students, I can wait for the question to come. You will not wait and you should not wait. You understand? No, if it doesn't come in this exam, I will tell next attempt students also, okay, I'm waiting for this question to come in exam. Very simple. So can I wait for the question to come in exam? What is the hurry for me? It can come anytime. But for you, can you wait? Not at all. Right? So what are the points in the special report to the registrar? Personal profiteering by the members of the managing committee, the detection of the fraud, the specific cases of the mismanagement, right? And what that is decisions against the cooperative principle, and in case of the urban cooperative bank, the disproportionate advances being given to the vested interest groups, right? The disproportionate advances being given to the vested interest group, doing reckless advancing without doing the assessment of the judging the credit worthiness of the party. Okay, right. Now what is one question we discussed regarding report? Special report to the registrar. Then there is also a point over there which is regarding the submission of the audit report. Then there is also a question over there regarding schedules to the report. Then there is a question over there regarding audit memo, and then there is something regarding narrative audit report. When you see the MCQs of ICAI relating to cooperative society, you wonder, where did they get this from? From where do they get all this? I never read. I've studied full cooperative society chapter. I never found anything called as a, a memo over there, a first audit memo or a questionnaire over there, or something called as a narrative form of the report or so. Why? Because you did not do the fine powder, no? What did I say? You have to do the minute reading of the subject over there. So after special report to the registrar, what are the other points we have over there? Submission of the report, then the schedules to the report, then after that the audit memo, and then you also have the narrative audit report. Everybody with me? Okay, right. So special report to the registrar, have we discussed? Right. Now you will tell me or I will tell you what points you see in submission of audit report. You will tell me or I should tell you what points we see in the submission of the audit report. Hannah, so one I can see 143.2. What is 143.2? Whether the financial statements give the information required by the act, give a true and fair view of the profit and loss account and the balance sheet. So that is 143.2. Then after that I see over there is the 143.3. In 143.3 I see the 3A. What is 3A? Information and explanation, which to the best of his knowledge and belief. Then proper books of account and balance sheet, profit and loss account, are they in agreement with the books of account? So A, B and D. Out of 143.3, 10 points. You know 143.3, 10 points? Information proper, branch books, AS, adverse directors, maintenance, IFC, others. Today full evening one song only. Don't talk to anybody at home. Anybody says what happened? Information proper, branch books, AS, adverse directors, maintenance, IFC, others. So say what happened? Information proper, branch books, AS, adverse directors, maintenance, IFC, others. You understand? No, that is what you have to go crazy. Otherwise, you'll go crazy when the day you get your result. You understand? So right now, only better to go crazy with the subject right now. So information proper, branch books. So balance sheet, profit and loss account, are they in agreement with the books of accounts? So that is why today morning only I taught you 143.1, 143.3, so that we can correlate it over here. Okay, right. Then schedules to the report. Now, what are the, now first thing you have to know, Kerry, all these questions are different. What madam is discussing here. Special report to the registrar, putting the cashew nut in your pocket. Did you put the cashew nuts in your pocket? Let me check your pockets. Are there cashew nuts over there? Yes, that is special report to the registrar. Then second one is the 143.2 and 143.3. Give and the information proper and the agreement. Then after that we have the schedules to the report. Schedules to the report, what does it say? In addition to the above, the auditor will attach schedule. What schedule? Like schedule to the Companies Act. Here you have to give the schedules to your audit report. What schedule? Whether transactions to the appear to be contrary. All sums of money has not been brought into account. Material or property belonging to the society, is it bad or doubtful of recovery? Any unnecessary expenditure and any other matter specified by the registrar, right? You have to learn. You have no other option. All what I'm discussing over here, no option. What are the schedule? Transaction, sum, material property and the expenditure. Right, so that's the schedule to the report. Then after that, what does it say? Any of the above matters is nil, then you have to give a nil report. So even though if you don't have a finding, do you have to give a nil report over there? Yes, you have to give a nil report. Okay. Then in addition to the audit certificate and the various schedules stated above, whatever we stated above, in addition to all of that, the auditor of the cooperative society has to answer two set of questionnaire, and these questionnaires are called as memo. Auditor has to answer two set of questionnaires, and these questionnaires are called as the memo. The first set of questionnaire is a general questionnaire, right? Generally and applicable to all types of societies such as urban bank, consumer credit, stores credit society, etc. And second type of questionnaire is the specific for a particular type of the societies, and obviously these questionnaires are drafted in detail. So what does it say? In addition to all we discussed above, auditor also has to submit the questionnaire. These questionnaires are called as the memo, right? These memos are of two type. What is the first type? Which is general, applicable to all cooperative society, and second is specific, which is applicable to particular type of the society. Okay, right? Then you have the narrative audit report. Narrative audit report, it says, has to be addressed to the chairperson of the society. So this report does not go to the registrar. This report goes to the chairperson, and this report is divided under two parts, part 1 and part 2. Part 1 has all these serious observations, right? It is very important, and it throws light on the comparative financial position, capital structure, solvency position, profitability, and others. Also, it gives these suggestions for improvement. It concludes those matters which could have an effect on the financial position. So all the serious matters, you put it in the part 1 of the narrative audit report, and all the routine matters, that you put it in the part 2 of the narrative audit report. What is routine matter? Voucher not found, missing voucher, loan bound, inadequacy of document, mistakes of principal in accounting. So all your critical observations, you put it in part 1 of the narrative audit report, and all observations which are routine in nature, you put it in the part 2 of the narrative audit report. Okay, tell me, what have you understood regarding the report? One, there is a special report. Then after that, what does it say? Also there is the submission of the report. Then after that, you also have the schedules to the report. Then after that, you also have the audit memos and the questionnaire 1 and 2, and questionnaire 1 and 2. And then in addition to that, you also have the narrative audit report. Is it right? Right, you also have the narrative audit report. Okay, right, so this completes our story regarding the cooperative society. Now we come to the story of the multi-state cooperative society. Multi-state cooperative society, have we seen the books of account? Yes, the books of account. Then who can be appointed as an auditor of a multi-state cooperative society? Now only CA. Now no GDCA, and no person who served as an auditor in cooperative department of government. That was only there for cooperative society, not for multi-state cooperative society. Because what did I tell you? Multi-state cooperative society provisions are very similar to company law, and very similar to Companies Act for multi-state cooperative society. Okay, right? So who can be appointed as an auditor? Chartered accountant. Who cannot be appointed as an auditor? Body corporate, similar to 141(3) A, but there we have other than LLP. Now this is as per old company law, so it just says body corporate. Then officer or employee of the MSCS, so that is 141(3) B. A person who is a member or who is in the employment of an officer or employee of the MSCS, 141(3) C. Then who is indebted or has given a guarantee, that is 141(3) D. But here what does it say? Exceeding 1000. Company law, what does it say? For indebtedness 5 lakh, and for guarantee 1 lakh. Here what does it say? 1000. No, but here it is, now this is as per the old law. You know, this multi-state cooperative society has been created as per the basis of the Companies Act 1956. In Companies Act 1956, what was the disqualification of company auditor? Only body corporate. But now again you need to look into substance over form. Okay, if it is allowed and again a corporate form, then a LLP can also do audit of multi-state cooperative society. But if I look into the legal provision, this is how. Now it will continue battery. Okay. Today evening, please keep the battery charged. Okay. Right. So now company form, because company has a limited liability, and that is why we don't want a limited form of organization to do the audit of any organization. That is why body corporate is disqualified. Okay. Right. And now over here, let's look into the disqualification. So are these similar to company law? Body corporate, officer or employee, person who is a partner or who's in the employment, indebted, guarantee. But what is the amount of indebtedness guarantee? 1000. Company law, how much it is? 5 lakh and 1 lakh. Okay. Right. And if any of the disqualification is attracted after appointment, he shall deem to have vacated his office as an auditor. Okay. Right. Then appointment of the auditor. Right. So now let's look into the appointment of the company auditor also, because some or the other day I have to discuss that also with you. So now quickly, all of you, you can write with me if you want. The appointment of the company auditor. So I'm taking a diversion from cooperative society, multi-state cooperative society, and coming to the company law, right? Section 139, right? So who can is appointment of company auditor discuss under two heads. What are the two heads over here? Other than government company, and in case of the government company. And then we talk about the appointment of the subsequent auditor, that is in the routine course, who appoints the auditor, who does the appointment of the first auditor, and who does the appointment of the auditor in case of the casual vacancy, right? The casual vacancy. And then after that, for first auditor and casual vacancy, I will write down over here BOD or members. And in case of government company, I will write down C and AG, Comptroller and Auditor General of India, BOD and members. Okay. Right. So this is the wonderful chart we prepare over there. Do you understand the format? What did I write? Appointment of company auditor. For other than government company, government company. For each of them, we have to discuss the appointment of the subsequent auditor, appointment of the first auditor, appointment of the auditor in case of casual vacancy. For other than government company, what I have written over here, BOD and member. And in case of government company, I have written CNAG, BOD and members. You understand? Everybody, do you understand that? Okay. Other than because lot of 30-day, 60-day, 90-day question comes in correct, incorrect, or in the MCQs also. I know, but format, you have to draw the format which I have talked about over here to remember it in the same format. Other than government company, appointment of subsequent auditor, appointment of first auditor, and appointment of the auditor in case of the catch vacancy. Let me draw the second part of the chart again. What did I say? Appointment of the auditor for OGC and GC, right? For OGC, I'm talking about first auditor and casual vacancy. And now in that, what do I write over here? BOD members. Here I write CNAG, BOD and members. Are you all with me? Right, everybody? Okay. Now, assuming that you'd remember the format which I have drawn. If you follow any other format, then I can't take the responsibility. But if you follow this particular format, then you have to remember 396363. Right, 396363. What does that mean? 39636. And then casual vacancy, everything is 3333, and then dash. What does that mean further? And now 30, right? 30, 90, 60, 30, 60, 33, 30, 30. What does that mean? First auditor for other than government company can be appointed by the board of directors within 30 days from the date of registration. However, if the board fails to appoint, members can appoint within 90 days at the EGM. Right. Government company first auditor can be appointed by the CNAG within 60 days from the date of registration. If CNAG fails to appoint within 60 days, then the board can appoint within the next 30 days. If board fails to appoint within the next 30 days, then can be appointed by the members within the next 60 days. Right, so basically first auditor, what you have to remember, 39636, because casual vacancy so damn simple, everything is 33 only over there. I know. What did I write? 30, 90, 60, 30, 60. So what is that? 39636. That is for the first auditor. And casual vacancy, all casual vacancies to be filled in by the board of directors within 30 days from the date of the casual vacancy. So today auditor disqualified. Who has to fill that vacancy? Board of directors within 30 days. But today auditor resigned. Again, board has to fill that vacancy within 30 days. But it shall also be approved by the members at the EGM within 3 months of the recommendation of the board. This is when the casual vacancy is due to resignation. Right, then government company, casual vacancy, first power given to the CNAG. They can fill the casual vacancy within 30 days. If CNAG does not fill within 30 days, then the board can fill it within the next 30 days. And what if the board does not fill within the next 30 days? There is no provision in company law for that. Is no provision in company law. And for government company, you don't even distinguish between casual vacancy due to resignation and other casual vacancy. Only in case of other than government company, you distinguish between the casual vacancy other than resignation, and if the casual vacancy is due to resignation. Are you understanding this, everybody? Right. So what have I written over here? 396363. What is that? 30, 90, 60, 30, 60, and then 33, 30, 30, and then dash. First auditor, he shall hold office till the conclusion of the first AGM. First auditor, he will hold office till the conclusion of the first AGM, and subsequent casual vacancy auditor, he will hold office till the conclusion of the next AGM, right? Casual vacancy auditor, he will hold office till the conclusion of the next AGM. Routine course, who appoints the auditor in case of the government company? The C&AG within 180 days from the commencement of the financial year. Right, CNAG within 180 days from the commencement of the financial year, the CNAG appoints the subsequent auditor in case of the government company. And other than government company, the auditor is appointed by the members at the AGM. But before the auditor is appointed, the written consent certificate is required to be obtained from the auditor that he is not disqualified, that he fulfills the criteria, the eligibility for the appointment of the auditor. And after the appointment, the company needs to inform the auditor, and the company also needs to file the form ADT1 with the ROC within 15 days of the appointment of the auditor. And also we say appointment of the auditor from the conclusion of the first AGM till the conclusion of the sixth AGM, thereafter till the conclusion of every sixth AGM. That sixth AGM funda applies whenever rotation is applicable to the company. And yesterday we already saw rotation listed, and then 10, 50, 50, and a rotation of the company auditor. Right, so in this entire chart, have I discussed the entire discussion regarding the appointment of company auditor? Right, what are the combinations we have? Right, other than government company and the government company. For other than government company, 3 auditors: subsequent auditor, first auditor, and casual vacancy. And again for government company, 3 auditors: subsequent auditor, first auditor, and the appointment of the auditor in case of the casual vacancy. Is it clear to everyone? Okay, now anyways, let's come back to MSCS. So MA's cooperative society, who appoints the auditor? Cooperative society. Cooperative society. Cooperative society, registrar of cooperative society. Multi-state cooperative society, who appoints the first auditor? The board of directors within 1 month. Company auditor within 30 days. Your first auditor to be appointed by the board within 1 month of the date of the registration of the society. Right, so yes. It's okay, power has come. Can you switch on the projector? Done? No, but this is not come, no, projector. No, it's coming, no. How many time you guys are changing the battery? AC? Okay. Yeah. Right. So first auditor to be appointed by the board of directors within 1 month, right? So the company law, what does it say? To be appointed by the board of directors within 30 days. Multi-state cooperative society law, what does it say? To be appointed by the board of directors within 1 month of the date of the registration of the society. And then that auditor will hold office till the conclusion of the first AGM. And what if the board does not appoint first auditor? Then to be appointed by the MSCS in the general meeting. So very similar to company. But company we said 30 days. Here what does it say? 1 month. Okay. Does it make a big difference? For the answer it makes a difference. Real life it doesn't make a difference. And a company law it says 30 days. Cooperative, multi-state cooperative society law says 1 month. Okay. Right. Subsequent auditor of the MSCS is to be appointed at each AGM. Right. Subsequent auditor to be appointed by the shareholder. Cooperative society who appointed auditor? Registrar. Multi-state cooperative society who appoints the auditor? The shareholders, the members at the AGM of the MSCS. Okay. Then powers and duties of the auditor of the MSCS. Okay. One, the auditor shall make inquiry. Inquiry reminds you of which section of company law? 143 1, duty as to inquiry. What were the 6 points of inquiry under 143 1? A for advances, B for book entry, C for company, D for deposits, E for expenses, and F for fake share. Now here what does it say? A for advances, B for book entry, then E directly. No C and D over here. Right, out of 143 1, C and D, is it there over here? No. So here whether any personal expenses have been charged to revenue account becomes the C, and fake shares, that becomes the F. And that's the D point actually over here. So A, B, E, F. Why A, B, E, F? C, D not there for inquiry for multi-state cooperative society. Are you getting these points over here, everyone? Right. So that is the inquiry of the auditor. In case of the right, inquiry of the auditor in case of the MSCS, what inquiry do you make? Right, so again question in your exam, qualification and appointment of auditor of MSCS, then powers and duties of the auditor of MSCS, contents of the audit report, again qualification, disqualification of the auditor. Okay, right, so what is the one inquiry? 143 1, A, B, E, F. Clear to everyone? Right, then contents of the audit report, again 143 2, give the information required by the act, give a true and fair view of the balance sheet, P&L. Then after that again 143 3, information explanation, proper books of account. Then branch office audited by a person other than the MSCS auditor, so that is 143 3 C. And then balance sheet, profit and loss account, are they in agreement with the books of account? Right, so similar to 143 2 and 143 3. Clear? Right, then powers of central government to direct a special audit of the MSCS. So who has the power to direct a special audit of the MSCS? The central government. When does the central government have the power? When they think that the affairs of the MSCS, this MSCS ka affair is no whatever the business of the MSCS, it is not being managed as per the sound business principles or the prudent commercial practices. They're not doing the business properly. Who? The MSCS. Who thinks so? Central government. Central government is of the opinion that the affairs of the MSCS are not being managed as per the SBP PCP, sound business principles or the prudent commercial practices. Then the affairs are being managed in such a way to cause serious injury to the trade or business. So they say if they continue this way, they will cause serious injury to the trade or business to which it pertains. And finally, the financial position of the MSCS is such so as to endanger its solvency. If it continues this way, very soon the MSCS might become insolvent. Who is of this opinion? Central government. And then central government can direct the special audit of the MSCS. Who they can appoint to do the special audit? It says the chartered accountant, any other CA, or the CA who is doing the audit of the MSCS. So the auditor who is doing normal stat audit, can he do the special audit also? Yes. Or can they appoint another CA to do the special audit? Yes. Who is going to appoint? Central government. When can the central government direct a special audit? It says when the central government, state government, either by itself or both held or both together, is holding more than 51% of the paid up share capital. So when does the central government have the power to direct the special audit? When it is holding not less than 51% of the paid up share capital. So look over here. Central government holds 55% of the paid up share capital in Kisan Credit Cooperative Society, which is incurring the huge losses. Advice whether CG can direct a special audit. Yeah, because central government is holding not less than 51%. So can they direct a special audit? Yes. So you need to write down in your answer the points regarding the special audit over there. Obviously, this report, this special auditor, instead of giving his report to the members, he will give his report to the CG because he's been appointed by the CG. Okay. Right. So those are the points over there regarding the special audit. Then after that, you have a question regarding the inquiry by the central registrar, and then also the inspection of the MSCS, again by whom? By the central registrar. Right. So inquiry, inspection. So see, it is like something is going wrong. Everybody is putting the cashew nuts in the pocket. So one, you're giving special report to the registrar, and now special registrar says something is going wrong. So one, the central government can direct special audit, and then what the central registrar can do? He can do an inquiry or an inspection of the MSCS. He can do an inquiry or the inspection of the MSCS. Inquiry is just making a, just having an interview or a discussion, and inspection is actually of the books of account. Okay, so now when can the central government direct an inquiry of the MSCS? It says when it has received a request from. So who has to send a request to the central registrar? A federal, to which that multi-state cooperative society is affiliated. Right, so they have one governing MSCS over there. Or a creditor. Can a single creditor also make a request to the central registrar? Yes. Or 1/3 of the members of the board, or 1/5 of the total members of the multi-state cooperative society. So federal, creditor, or 1/3 of the members of the board, or 1/5 of the total members of the cooperative society. And then what does it say? The central registrar may authorize any person to do the inquiry. Then before the inquiry, at least 15 days notice should be given. Again, this is a question asked. Directly the person went for doing the inquiry. It says, no, you have to give us 15 days time, and only then you can come for the inquiry. But then what are the powers of the central registrar or the person who is authorized? They have access to all the books, right? Then they can also call for a notice, is call for a meeting of the cooperative society, multi-state cooperative society. Notwithstanding, any bylaw specifying the period of the notice of the meeting requires the officers of the society to call a general meeting. So does the central registrar or the person authorized on his behalf have a power? Okay, please call an urgent general meeting. Can he tell to the members of the officers of the society? Yes. Right, what does it say? By giving a notice of not less than 7 days at such time and place at the headquarters of the society. So can the person who is doing the inquiry, yes, can he require a general meeting to be called for? Yes, by giving a 7 days notice. And what does it say? If the society refuses to call for such a meeting, he has a power to call it himself. So he will tell the officers that call for a meeting, and if they fail to call, then he can call for the meeting himself. Again, he can summon any person. Summon means checking the person on oath, and for getting any information, right? Examine such person on the oath, and then again the follow up within a period of 3 months of the date of receipt of the report, right? So that's the inquiry of the MSCS. And then on similar lines, you also have the inspection. Again, federal, creditor, 1/3, 1/5. Again, 15 days notice. Again, have access to the books. Again, they can call for a general meeting, and again every officer shall furnish the information. Right, so what are the questions asked in your exam? First auditor of the MSCS will be appointed in AGM. First auditor of MSCS will be appointed in AGM. First auditor of AGM, first auditor of MSCS is to be appointed by the board of directors within 1 month from the date of registration of the MSCS. First auditor or auditor of MSCS shall be appointed by the board within 1 month of the date of registration of the society. Yes. Okay. Before holding inquiry by central registrar, 30 days notice must be given to MSCS. 30 days notice? No. What did we just see? 15 days notice must be given. Knowledge is power. You understand? No. Now why you're saying immediately 15? Because we just studied it. Okay, 15 days notice is required. You are appointed as an auditor of a cooperative. So exam में careful, huh? Cooperative or multi-state cooperative. State the special features of cooperative society, audit classification of the society, and discussion of the draft audit report. Right? So out of the so many, what you say, audit features of cooperative society, they are asking you two over there. Which two have they asked in the exam over there? The audit classification of the society and the discussion of the draft audit report with the managing committee. Then all these are the questions regarding the MSCS, and again a question in the RTP regarding the inspection of the MSCS. Right? Clear to everyone so far? Right? So effectively have we completed this one more chapter over here? Small chapter regarding the cooperative societies. Okay. Right? Let us just come little bit, not troubling you much now, just little bit of the basic concepts in auditing, wherein we'll come to the concept of the audit risk. Right? Audit risk. Okay, so now you just need to listen so that I understand that you already are aware about it, and if you don't know it, you understand it right away. Right, what is the overall objective of the auditor? To obtain reasonable assurance, right? I need your complete attention right now. Why? Because only if you understand this, you can get the gist of the standards. You can understand what is an audit process if you understand the discussion which I will do in the next few minutes. Right, what is the overall objective of the auditor? To obtain reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. Okay, reasonable assurance has been defined to be a high level of assurance but not an absolute assurance due to the inherent limitations of an audit. Okay, now say example I am telling, nothing hard and fast, but say reasonable assurance means 97%. Can I take it 97? Yeah. Can I take it anything which is not 100%? Yes. 99.9999? No problem. Okay. So now what does that mean? Just for you to understand, what does that mean? Can 97% I am saying that these financial statements are free from material misstatement. That is what I can interpret. If I say reasonable assurance is a high level of assurance, that means, and I'm saying reasonable assurance is 97%, that means 97% I am telling you. What am I telling you? That these financial statements are free from material misstatement. Means on the other hand, what have I also told you? That 3% they may not be free from material misstatement. There is a risk that there might be a material misstatement in the financial statements. Okay, like in case of Satyam, and a long time back in 2009, what happened? Their auditor, right, expressed an opinion on the financial statements saying that they give a true and fair view. In reality, did ever the financial statements of Satyam give a true and fair view? No, there was a 7,000 crore fraud in the financial statements of Satyam. So did the opinion of the auditor go wrong? Did the opinion of the auditor go wrong? What auditor said true and fair? Reality, were they true and fair? No, there was a material misstatement in the financial statements of Satyam. Okay, what you say after you write the exam, you come home and then you say, this time I will clear. And this time I will clear. And then day of result, opinion weighs wrong. And opinion goes wrong. Are you understanding? Right? Your opinion goes wrong. So here, whenever auditor expresses an opinion, is there a risk that his opinion could go wrong? Whenever I say true and fair, is there a risk that it may not be true and fair? Right. So what is that risk called as? That risk is called as the audit risk. What is the definition of audit risk? Please listen to me with both your ears wide open. What is audit risk? The risk that the auditor expresses an inappropriate audit opinion. I saying true and fair is an inappropriate audit opinion when the financial statements are materially misstated. There is 7,000 crore fraud, and look at this auditor. He is saying is true and fair. So is this a risk in the audit? Okay, I express an opinion true and fair, but actually they may not be true and fair. There might be a material misstatement which I might not have detected during the audit. Are you understanding that? Okay, right. So if I say I want to obtain a reasonable assurance of 97%, if I say 97% assurance I want to give to my users that these financial statements are free from material misstatement, can anybody tell me how much is the audit risk? How much is the audit risk? Now see, I this time want to ensure that my chances of passing are 90%. It cannot be 100%. You're writing ICI exam. Okay, so you say, but ma'am, this time I want to ensure that my chance of passing is 90%. Then automatically you have no option but to keep your chance of failure at 10%. So do you understand? Is your risk of failing 10%? No, you have to reduce it to 10%. You understand? No. When I say risk is 10% and when I say risk is to be reduced to 10%, there is a difference between the two statements. When I say risk of failing is only 10%, or it is not 10%, you have to reduce it to 10%. And to reduce it to 10%, you will have to study more and more. Right. Similarly, if auditor wants to obtain, now give me the correct answer. Others keep your mouth quiet if you don't know the correct answer. Only intelligent students are going to answer now. If auditor wants to obtain a reasonable assurance of 97%, he has no option but to reduce the audit risk to 3%. Do you understand? Will you say audit risk is 3%? Never. You will say it is to be reduced to an acceptably low level. Everywhere you read the auditing standards, they say reduce to acceptably low level. Now, obviously, if I want to reduce risk, for that what I'll have to do? Obtain more and more and more of sufficient appropriate audit evidence. Are you understanding that? Okay. And see, so logical. The more the evidence I obtain, the more the assurance. And obviously, the more the evidence I obtain, the lower the risk. More evidence, less risk of my opinion going wrong. More evidence, more assurance. Are you understanding? Do you understand how these three terms are interrelated? Right? Audit risk is to be reduced to 3%. In my example, it is to be reduced to an acceptably low level. Okay, you want to go? Yeah, you can go. Right? Audit risk is to be reduced to 3%, to an acceptably low level. Okay. Now, this audit risk has been further divided under two. This audit risk has been further divided under two. And do you understand? In my example, it is to be reduced to 3. Okay, right. This audit risk has to be further divided under 3. Audit risk is the function of the risk of material misstatement and the detection risk. Risk of material misstatement could be at the financial statement level or it could be at the assertion level. What are the assertion levels? Account balances, classes of transaction, and the presentation and disclosure, and further divided under the inherent risk and the control risk, right? Inherent risk and the control risk. Are you understanding that? Okay, now what does the standard say? SA 315, 200, all of them, that RMM we assess and detection risk we manage. RMM we assess and detection risk we manage. Okay, RMM we assess. How we assess? By following the risk assessment procedures of SA 315. Hello, what is the title of 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. So, you know, I go for the audit. When I go for the audit, what I do? First thing, I understand the entity and its environment. By understanding the entity, I come to know that purchase price of raw material has gone high. I come to know that tax rates have increased. I come to know that competition has increased. I come to know that there is a change in government policy. When I understand the entity, I come to know all of this. Now, if I think, okay, oh, if purchase price has increased, professional judgment of auditor, maybe, not sure, maybe the company would have done some under recording or some no recording of purchases. Maybe the actual purchases of the company are 100 crore and they recorded only 80 crore. Am I sure? No, no. I only think that there is a chance, there is a possibility, there is a RMM, there is a risk of material misstatement in the purchases. What is risk of material misstatement? Risk that the financial statements may be materially misstated prior to audit. Right? Is risk already there? Before I came for audit also, was this risk there? Yes, I came and only assessed, okay, how much is the risk. So see, did the purchase price of raw material increase because I came for audit? It has anyways increased. Did the competition happen because I came for audit? No, it already happened. I only understood the entity and I assessed it. Is it sure if purchase price of raw material has increased, that means purchases are wrong? Not necessary. I'm saying they could be wrong. They may be wrong. There is a possibility of fraud or error. Are you understanding? So say like, there are 300 items in the financial statement. And a balance sheet, so many items, P&L, so many items, and balance sheet disclosures, no, so many items over there. Out of these 300 items, I have to identify those items where there is an RMM, and out of that, I have to identify those items where there is a significant risk, which is a significant risk. But am I going to do audit of all items? Yeah. I will perform audit procedure for each of these like 300 items in financial statement. But say out of that these 10 areas are RMM. So for them VIP. And out of these 10 areas, 3 areas are SR. So they are like VVIP. Something like key audit matter. Now, okay, 320 hours in my audit went in checking that one area. So does that mean I'm only going to check that one area? No, I am going to do checking of all area, but where the risk is more, the checking is going to be more. In more simple language, these are like the A category item, these are like the B category item. It's like I've done an ABC analysis. And I'm not doing donkey work. I'm not putting equal amount of effort in doing audit of all area. I am doing audit of all area, but am I putting equal effort for all area? No, where risk is high, I do more checking. Where risk is not there, I do normal checking. You have to understand this. You can't, I have no option but for you to understand this. You understand? That is why they say, okay, auditor nowadays, what he does, risk-based audit approach. We don't do donkey work, we do monkey work. And a smart work. And not only hard work, smart work. So first what you need to do for the smart work, you have to identify, assess the RMM. This RMM could be financial statement level or assertion level. Financial statement level means overall. Like what? I think CEO of the company has done a fraud. Now where could CEO do a fraud? Any area. Or I say, I think CEO has done a fraud in revenue. Then revenue means assertion level classes of transaction. I say like non-compliance with AS. This company does not comply with accounting standards. Then it is RMM at financial statement level. I say this company has not complied with AS2. Assertion level. Simple. Wholesale and retail. If you can pinpoint which element of financial statement is affected, then assertion level. If you can't pinpoint, then financial statement level. Okay, right. Now, assertion level risk has been further divided under inherent risk and control risk. What is inherent risk? Possibility of a misstatement in an account balance classes of transaction before consideration of controls. Possibility of a misstatement in an account balance, classes of transaction, presentation disclosure, which could be material either individually or when aggregated with other misstatement before consideration of controls. Did I check the controls in the company so far? Nothing. I'm saying it is inherent. Inherent means what? It is there by default. What is the definition? This is, see, Simple language definition is what? Possibility of misstatement before consideration of control. But technically, how do I write it? Possibility of a misstatement. In an account balance, classes of transaction, presentation, disclosure, which could be material either individually or when aggregated with other misstatement before consideration of control. Purchase price of raw material has increased. What did internal control do? Nothing. It is an inherent risk. It is there before consideration of control. Now, does management know this? That purchase price of raw material has increased? Does the management of the company know this? That purchase price of raw material has increased? Yes. Does management know that now the employees might do a fraud, or management themselves might do a fraud in recording purchases? Is it possible? Can now, because purchase prices increase, they might do some manipulation in the recording of purchases. So will management put controls so that this doesn't happen? So now 100% it can't happen if management has put controls. You understand? There is a risk कि क्या purchase price of raw material increase. That is why there is a chance now कि purchases may not be correctly recorded. That is why management has put control कि it should not happen like that. Can now controls give you 100% guarantee that purchases are properly recorded? No. Can controls give you 100% guarantee? No, because there are inherent limitations of internal control also. But to some extent, can it give you some guarantee? Right, but some guarantee it cannot give you. So whatever guarantee it cannot give you, that is called as the control risk. Right? What is control risk? Possibility of a misstatement. Again, in an account balance, classes of transaction, presentation, disclosure. Again, when individual material individually or aggregated with other misstatement, which will not be PDC. What is PDC? Which will not be prevented or detected and corrected on a timely basis by the entity's internal control. Which will not be PDC, prevented or, see, control ka kaam kya hai? What is the role of control? To prevent a misstatement happening. If it happens, detect it, correct it. Now these controls, hopeless. Hopeless, they are not preventing, they are not detecting, and obviously if you don't detect, you can't correct a misstatement in the financial statements on a timely basis. Array, very simple. The higher the deficiencies in internal control, the more the weaknesses in internal control, the higher would be the control risk. And will there always be control risk? Always, because inherent limitations of internal control. You're showing as if you've understood. I'm so happy. Okay, and maybe you've understood also. Audit risk is the function of the risk of material misstatement and detection risk. Risk of material misstatement, financial statement level, assertion level. Assertion level, inherent risk and control risk. What is audit risk? Risk that the auditor expresses an inappropriate opinion when the financial statements are materially misstated. RMM, risk that the financial statements are materially misstated prior to audit. Then inherent risk, possibility of a misstatement before consideration of control. Control risk, possibility of a misstatement which will not be PDC, prevented or detected and corrected on a timely basis by entities internal control. And what do? RMMV assess. RMMV assess. How much is audit risk in my example? It is to be reduced to 3%. Out of that, say I assessed RMM to be 2.3. Why 2.3? Take any number less than 3. Just I'm taking some number. How much is RMM? 2.3. Only intelligent students tell me what is detection risk? Only intelligent students. Exactly. It is to be reduced to 0.7. Do I have an option? Absolutely no option. Because is detection risk 0.7? No, it is to be reduced to 0.7. And that is why what we say, detection risk we manage. What is detection risk? Say you are checking rent. You said, client, I want to check the rent of Geo Limited. Your rent expenditure for the year is 24 lakh. Please show me the rent agreement. I am doing audit for which year? 31st March 2026. Client say, oh, CA, you want rent agreement. Come, yes, take this rent agreement. And then you say, oh, client, you gave me rent agreement. Thank you so much. Rent checking done. Array, at least once you should have seen that the rent agreement was of Mio Limited. It was entered in 1994. Rent per month given is 10,000. So now, why are you performing an audit procedure? To detect a misstatement. Did you detect the misstatement? No, that is detection risk. Did you detect the misstatement? No, that is detection risk. Are you understanding? Why do we perform an audit procedure? To detect a misstatement, and the possibility that you may not detect a misstatement is detection risk. Okay. Now, can I reduce detection risk? Can I manage detection risk? You say, madam, had you been little bit alert, no, you would have detected. So can I reduce it? Right, you remain more alert, you can reduce it. You put more experienced staff, you can reduce it. You obtain more sufficient appropriate audit evidence, you can reduce it. Can you make it zero? Never. But can you reduce it to an acceptable level? Yes. So that is why it says it is to be reduced. And ultimately, how do you reduce it? By obtaining sufficient appropriate audit evidence. And what you are saying, no, no, ma'am, unable to obtain sufficient appropriate audit evidence. Then what to do? Qualified or disclaimer as may be appropriate. So if you're not able to reduce detection risk, ultimately what will happen? QO or DO. You understand? This is the entire thing of what happens in an audit. You have to assess RMM, you have to manage detection risk. Are you understanding, everyone? Just 2-3 minutes, few minutes more, right? What is audit risk? Audit risk is the function of the risk of material misstatement and detection risk. RMM we assess and detection risk we manage. To assess RMM, the procedures performed by the auditor are called risk assessment procedures. To manage detection risk, the procedures performed by the auditor are called further audit procedures. These two put together are the audit procedures. Now look over here. What are the audit procedures to obtain the audit evidence? Risk assessment procedures and further audit procedures. Why do you perform risk assessment procedures? To assess the, why do you perform risk assessment procedures? To assess the RMM. Why do you perform further audit procedures? To manage the detection risk. These two put together is nothing but the audit risk. Have I just done the chart upside down? If I start with audit risk, I reach to audit procedures. And if I start with audit procedures, I reach to audit risk. You understand, everyone? Okay, audit risk, assess RMM, manage detection risk. The procedures you perform to assess RMM are called as risk assessment procedures. 315. Further audit procedures, SA 330. Audit procedures as such are given in SA 500. है ना, SA 500. What is the chart of audit procedures in SA 500? Audit procedures, what does it say? Risk assessment procedures and the further audit procedures. Why do you perform risk assessment procedures? To assess the RMM. Further audit procedures to manage the detection risk. Further audit procedures further divided under two: test of control and substantive procedures. TOC, what does it mean? You're checking the design, the implementation, and you're checking the maintenance of the internal controls in the organization. That means, in other language, you're checking the operating effectiveness of the controls in the organization. Right? Operating effectiveness. And substantive procedure, you can do the test of detail or the substantive analytical procedures, or agreeing the financial statements to underlying records and examining material journal entry. So if ever you have a question, ma'am, these auditors, these big four and all these audit firm, ma'am, what they do in stat audit? So many people are going, what they do, how they express opinion true and fair, what audit procedures are performed. These are the audit procedures. What are the audit procedures? Risk assessment procedures, then TOC, and then substantive procedures. Right? Everybody, do you understand that? Risk assessment, TOC, and substantive. Regarding TOC, we have some 7-8 questions to discuss, and also a few questions regarding the substantive procedures, because ICI is asking a lot of questions from the TOC part over there. Right? So, but do you understand? So far, this much have everybody understood? Audit risk and the audit procedure? Everybody, right? So audit procedures, what are those? Risk assessment procedures and further audit procedures. Further audit procedures, TOC and substantive, right? So tomorrow, as I've stopped over here with the audit procedure, we'll first do some basic concepts in the auditing. Then after that, we'll come to the analytical procedures and the audit sampling, right? Analytical procedures and the audit sampling. Then after that, we'll also complete with our Caro done, no? Right? Items of the financial statement. And then after that, we also look into the automated environment and the government audit, right? So busy day for us every day. Right, so just hope that we can cover the maximum possible, right? So I expect all of you to read, right? Revise whatever we've studied today and read. So these 5 days of the class, you should dedicate it only, breathing audit. And no other, like you breathe oxygen. So now you have to only breathe audit, so that you get the maximum advantage and there is full of audit with you. Okay, so see you all tomorrow. Okay, thank you.